Cathie Wood, a well-known investor, has revealed some very important information on Tesla's Q3 plans. Experts predict that Tesla has a long but promising future. The majority of them firmly believe that Tesla is making efforts to hold on to its top spot in the EV market. Keep an eye out and stay tuned for additional information about Tesla's ambitions. Businesses must ensure that they follow plans as closely as possible, even though things don't always go as planned because unanticipated events almost always interfere with them. Nevertheless, big businesses like Tesla carefully create plans and make sure they are carried out. You can see Cathie Wood reveal this important information regarding Tesla's Q3 plans in today's video. Some claim that Tesla is likely to have its best quarter ever in Q3, with the company's highest ever month of vehicle production occurring in June 2022. Over 305,000 Tesla vehicles were built, and over 300,000 were delivered in the first 3 months of 2022. On the other hand, the corporation produced and delivered more than 254,000 automobiles in the second quarter. Tesla attributed the drop in output and delivery to difficulties resulting from the closure of its Shanghai factory. Nevertheless, the business claimed that June 2022 was the greatest month for car manufacturing in Tesla's history. The number of vehicles produced in June was not disclosed by the EV firm, although it is believed to have been in the neighborhood of 120,000. With its Berlin and Austin facilities bearing the most weight, Tesla can easily accomplish its best quarter ever in terms of output in Q3 if it maintains this high production level. The fact that Cathie Wood is positive on Tesla is by now widely known. Tesla is one of Wood's top holdings. Wood is the manager of ARK Invest funds, which include the ARK Innovation ETF. When talking about the investment philosophy behind Cathie Wood's wildly successful ARK Invest Asset Management Fund, words like disruptive innovation and convergence frequently come up, and these concepts are arguably connected to Tesla. It should come as no surprise that the Cathie Wood-led ARK Invest has so much faith in Elon Musk's Tesla endeavor that the stock accounts for a full 10% of the fund's value. When it comes to investing principles, Tesla meets a number of Cathie Wood's requirements. In fact, Cathie's involvement in the form of an open letter to Elon Musk in 2018 kept Musk from repurchasing Tesla stock and reinstating the business as private. The letter proved to be something of a phenomenon. Within, Cathie Wood presented a 5-year bull case for Tesla shares, projecting a price of up to $4,000 in 2023. At the moment, Musk was content to spend merely $420 for each share in his fledgling stock repurchase program. If you look at the revenue growth the last 5 years, it's compounded at roughly 48% per year. And that was, as you recall, when Tesla was experiencing quite a bit of controversy, stated Cathie Wood. Our forecast for the next 10 years is in the 50 to 60% range, depending on if you take our bull or bear case, and there are a few reasons, states Cathie Wood. In other news, Tesla has announced that it will surpass the capacity of the Kato pilot line near the vehicle factory in Fremont, California, before the end of the year, begin producing 4,684 MAP battery cells at the Texas Gigafactory this quarter. Tesla manager Drew Baglino clarified this at the analyst conference pertaining to the most recent quarterly results. The pilot line's current production of 4,680 cells is insufficient to produce 1,000 automobiles each week. Getting the production process for the new technologies, such the dry electrodes, under control remains a difficulty. Nevertheless, Tesla reaffirms its intention to start producing 4,680 cells in Q3 with a focus on Texas. We built our first test vehicles with Texas cells by the end of the line, and the cell equipment was fully installed and commissioned last quarter, Baglino stated. We want Texas to begin production this quarter, and by the end of the year, we think Texas will be able to outpace Kato's weekly production located on Kato Road in Fremont. Kato is Tesla's current pilot line. It is also frequently referred to as Terra. Tesla is producing a standard range Model Y, which is exclusive to North America, at the recently opened Giga Texas. This model uses 4,680 cells and structural battery packs. Still manufactured there, though, is the Model Y long range, which most likely still employs traditional battery packs with the smaller 2170 cells. Tesla claims that it is independent of the advancement of 4,680 production in Texas and California. According to Elon Musk, Tesla has sold enough 2170 format cars to cover the entire year's worth of vehicle production. He emphasized that, rather than now, this year the 4,680 cells will become significant in 2023. Furthermore, Tesla does not intend to rely solely on its 4,680 production cell. In May, partner Panasonic began its own pilot manufacturing in Japan and shipped the first 4,680 sample cells to Tesla. It was revealed this week that a battery facility for serial production is likely to be constructed in Kansas. In Chinoa, Samsung SDI is constructing a 4,680 pilot line serial manufacturing is expected to begin in Malaysia later. Regarding Tesla, what are your plans for the near future? Tell us in the space provided for comments below. For more of this stuff, don't forget to hit the like and subscribe buttons. Now that the third quarter is more than halfway over, investors in Tesla have a better understanding of how the company's electric vehicle deliveries may be going. Any forecast at this point, though, should still include a healthy dose of caution. In China, the location of Tesla's factory with the highest output uncertainty is still very high. It should be highlighted that the primary factor preventing Tesla from producing at its current rate this year was the operational limitations imposed by the government in accordance with its zero-COVID policy. These days, a heat wave. Related power outage is endangering industrial operations and possibly upsetting the company's supply chain. Investors can still attempt to project a rough range of delivery receipts for the quarter, though. More crucially, a detailed examination of Tesla's operations still paints a positive picture of the firm's growth prospects for Q3 and beyond, notwithstanding the ongoing uncertainty the company faces. Notwithstanding the present difficulties, it's hard to pinpoint the precise location of Tesla's quarterly deliveries in Q3, but one thing is for sure: significant year-over-year growth is probably in store. It should be noted that although there was either a temporary shutdown or restricted operational capacity at Tesla's high-output factory in Shanghai for the entirety of the quarter, the company's second quarter global deliveries climbed by 27% year-over-year. Given these limitations, Tesla's ability to increase worldwide manufacturing at this rate is indicative of the company's momentum. Additionally, Tesla reported that its Shanghai manufacturing achieved record monthly production levels as Q2 came to an end. All things considered, it's possible that the manufacturer has already manufactured a sizable number of vehicles at the factory, even though potential power limits pose a threat to Tesla's manufacturing rates over the remainder of the quarter. Furthermore, during Tesla's earnings call for the second quarter, management expressed optimism regarding the company's potential for production expansion in the second half of 2022. The quartet. According to Cathie Wood, entrance hurdles that appear to have increased in Tesla's advantage are particularly noteworthy. Battery technology comes first. With the exception of a few in China, Wood claimed that Tesla is the only automaker that has chosen to ride the consumer electronics industry's cost curve. This is because laptop and/or cell phone batteries need to be changed. Because of this, even though its current cost is lower, its battery pack system is still substantially less expensive than that of other automakers. According to Wood, the other manufacturers would lose money on electric vehicles, while their sales of gas-powered vehicles will decline if they hope to compete with Tesla. The artificial intelligence chip, which is all about autonomy and is only being used by Tesla, is the other entry barrier. Wood claimed that James Wang, their analyst and an 8-year veteran of NVIDIA's artificial intelligence division, was astounded by the specifications of Tesla's technology. According to Wang, Tesla is 4 years ahead of all other automakers in terms of available semiconductor technology specs. According to Andrei Karpathy, Tesla's AI director at the time, the company has amassed billions upon billions of miles of real-world driving data, which presents the next obstacle to entrance. Compared to other companies, they have the most corner instances on which to train their algorithms. Wood claimed that since Tesla already has over 1 million robots, including her Model 3, roaming the world gathering data and reporting it back every day, other competing businesses will never be able to catch up. Over-the-air software updates are another barrier to entrance, according to Cathie Wood, who finds them surprising. Wood revealed that after receiving her Model 3 in 2018, she has never needed to have a problem with it serviced. Tesla is a disruptive force in the transportation industry that could be included in Cathie Wood's script. ARK looks for trailblazers and those who are redefining their industries. Tesla may not be the only electric vehicle company in the area. In fact, there is fierce rivalry from what seems like everywhere. However, in the competition for more Tesla stock material, it is the one at the front and setting the pace for its competitors. View our other videos by going to our channel.